You stare at a declined purchase while your car sits outside the repair shop, 1 week before payday. The problem suddenly feels much larger than the bill. Your phone shows an emergency credit offer, and you hesitate because the limit is small and the interest rate is painfully high for something you desperately need. You accept the card because the repair cannot wait. For the first time, borrowed money feels less like spending and more like a bridge between today and payday. The mechanic hands you the keys, and relief arrives before the statement does. You drive home knowing tomorrow's problem has simply moved into next month. Then, the statement arrives. You make the minimum payment, expecting the balance to fall, but almost nothing changes after that first payment. You keep paying and the balance keeps revolving. The bank earns from your emergency, while you slowly realize that rescue can carry a surprisingly long price. Months pass, your income steadies, and the pressure eases. Then an unexpected invitation appears, offering a larger limit without you asking for one. You open the new offer and stare at the higher limit. The same card now seems to trust you more than it did before. Your interest rate drops, rewards improve, and another issuer starts competing for your spending. Suddenly, credit is no longer merely helping you survive. You begin using the card for ordinary purchases, not emergencies. The strange part is how quickly convenience starts replacing caution in your daily decisions. Then a trip goes wrong. Your flight is delayed for hours, and you discover that your upgraded benefits can change the experience without changing the weather outside. You enter a quiet lounge while other travelers remain behind the crowded gate. For the first time, the card seems to be selling you something besides credited. That changes what you compare. You still notice prices, but you also notice waiting, uncertainty, crowded rooms, and the small costs attached to inconvenience everywhere. Later, your spending becomes large enough that a dedicated representative calls. Elena knows which benefits matter to you before you explain what you need. You notice the difference immediately. You are no longer navigating a generic service line. Someone is trying to understand how to keep your business. At first, the attention feels flattering. Then you realize why it exists. Your spending is valuable enough that losing you has become expensive for the institution. Your annual spending keeps rising, and another conversation happens behind a polished office door. Marcus discusses the fee, as though it were negotiable from the beginning, and you expected to defend yourself against a price. Instead, Marcus is discussing how much value the institution can offer to keep you from leaving. That is when the relationship changes shape. The card itself has not become magical. Your position inside the business model has changed dramatically. You remember the repair shop months earlier, when a small emergency could have broken your budget. Now large purchases barely create a second thought. Your spending begins opening doors that money alone does not explain. Service becomes faster, problems become easier to solve, and uncertainty starts disappearing around you. Then the invitations become more selective. Travel arrangements can be tailored, specialists become reachable, and the issuer contacts you before you need anything. You notice something uncomfortable beneath the convenience. The more valuable your relationship becomes, the less the institution wants you handling ordinary problems alone. Eventually, you ask for a change instead of asking whether a change is possible. The answer surprises you because someone actually considers your request seriously. Your spending has become leverage. If you leave, the institution loses enough business that keeping you becomes a financial decision on their side too. That leverage can reshape fees, benefits, limits, and service. The conversation is no longer about whether you qualify. It is about what keeps you. You think back to the first card, when approval felt like a favor. Now approval feels almost irrelevant, because the relationship has become mutual. The irony becomes impossible to misuse. The person who once paid the highest price for emergency credit can eventually receive the cheapest borrowing available. You look at your old statements and remember the tiny purchase that once caused real fear. The plastic never changed, but your bargaining position did. Your spending has become a signal that changes how businesses approach you. What once looked like dependence can eventually become negotiating power. You could spend millions and still make terrible financial decisions. But once your spending becomes strategically important, institutions have reasons to compete for your loyalty. And somewhere, another customer is staring at a declined purchase, wondering why the same piece of plastic seems to open a completely different world elsewhere. You close the old statement and put the card away. You finally understand what changed. The card did not become generous. You became valuable.